looking back at peak prices in 2011, which might sound like ages ago, but it's 10 years, 11 years ago. When prices peaked back then, they peaked at around $2,000, $1,900, depending on if you use a daily peak or a quarter average. You know, we're close to that. But if we do an inflation adjustment for those prices, that would represent today close to $2,500, $2,700 per ounce.
Today, we are fortunate to be joined by Jorge Ganoza. He's the CEO of Fortuna Silver Mines. They're an intermediate gold and silver producer. They're growing, they're diversified. Soon they will have a presence in 6 countries. Currently, they have 4 operating mines, soon to be 5 with their Seguela mine, which will come online here in the coming weeks. Jorge, welcome to Ron's Basement.
Thank you, Ron, and a pleasure to join you in the basement again.
It's great to see you. And on behalf of my audience, thanks for giving us your time this morning. You recently put out your first quarter earnings. I thought they looked great. I think the initial market reaction was very positive. You want to touch on some of the highlights of what you accomplished during the first quarter?
Yes, you know, we were able to once again show a strong operational performance. Or gold, silver production or costs came all within guidance, what we provided the market for guidance. So we're tracking well in the start of the year. On financial performance, we reported earnings per share of 4 cents. When we do an adjustment there, we came in at 5 cents. You know, our mine operating income came in at, you know, over $40 million, or EBITDA, $65 million, or net cash flow from operations came in at $42 million. So, you know, the business generated strong cash flows. Usually Q1 is a quarter when we, you know, meet our commitments on taxes and all of that. So we paid close to $13 million in taxes. We funded corporate expenses for the period, of course, and we funded all our sustaining capital needs. And after all of that, our free cash flow was close to $8-9 million, right? So, you know, we are comfortable with that. And something that also is worth understanding is that our average realized price for gold was $1,880. If you look at our Q1 2021, that's 2 years ago, we were selling gold at realizing gold at a similar price as we are today. So we'll think of mining equities in the precious metal sector as a hedge against inflation, but really the hedge has not materialized yet, because over these past 2 years, we've seen inflation that has driven costs not only for us, but across the industry and in your household and everybody's household. Everybody has felt the pinch of inflation. Costs are up 20 to 30% over this period of time. And we're essentially selling gold at the same price. And silver even 14% lower than what we were selling a year, 2 years ago. So there has been significant margin compression across the industry. We have not been immune to that. So if you look at our performance in Q1 2023 against Q1 2022 or Q1 2021, you see a deterioration in margins. But in spite of that margin compression, we are still running a very healthy business that generates good free cash flow and is looking good and promising. Yeah.
Yeah, I commend you on that, because like you said, the margins have been compressed, but you have found a way to continue to generate free cash flow from operations overall. And I'm an old accountant, and I understand accounting rules and how all that works. But at the end of the day, cash flow is king. If you're generating free cash flow, that is a very good sign for a business. And I was looking at the gold and silver prices, comparing what we've had so far in the second quarter, the current quarter that we're in, compared to the first quarter. And it seems like gold is maybe on average so far been about $75 an ounce higher. Silver, maybe 40, 50 cents higher. So hopefully, as we move into the coming weeks and months and quarters and years, we'll have a better silver and gold price, and that hedge will materialize.
We are certainly seeing some relief on the side of prices, right? This is an industry where we don't have pricing power. So yeah, it's always welcome, but I agree 100% with you. In the second quarter, we are realizing higher prices than what we've seen in the past quarters, and quarters dating back to 2 years, as I pointed out. In nominal terms, gold and particularly gold is close to record highs, right? In nominal terms. But if we do an inflation adjusted gold price, let's say looking back at peak prices in 2011, which might sound like ages ago, but it's 10 years, 11 years ago. When prices peaked back then, they peaked at around $2,000, $1,900, depending on if you use a daily peak or a quarter average. We're close to that. But if we do an inflation adjustment for those prices, that would represent today close to $2,500, $2,700 per ounce, right? Mm-hmm. The margins we enjoyed 10 years ago with similar prices as we have today on nominal terms was phenomenal, right? Sure. And that has not materialized yet, to your point. No, the hedge has not materialized yet.
Right. And you can only defeat math for so long. So eventually, I believe that will materialize, and the producers, including yourself, will be able to harvest the benefits.
Yeah, we try to run a business that when we look at the business, we have to look at it with some level of agnosticism with respect to gold price, right, or silver price, because we need to perform throughout the precious metals price cycle. Our assets need to deliver in any price environment. But, we're always hoping for the good days, right?
Right. And they will return.
Yeah, and we can talk about our expectations on gold prices for sure. But yeah, I think we are in a very interesting times for precious metals. Absolutely.
First Mining Gold is a development company advancing 2 of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has 0 debt, and owns an interest in 4 additional Canadian gold development projects.
I want to touch on Fortuna's financial condition and the balance sheet. I know a lot of my viewers probably aren't into balance sheets to the extent that I am, but I find it so interesting, the value proposition offered by the stock right now. When I look at the balance sheet of Fortuna, you have about $2 billion in assets. You have about $700 million in liabilities, debt, or payables, however you want to say it. That leaves about $1.3 billion in equity, net tangible assets. And the market cap of the company is below $1 billion. So essentially, for every dollar, if I were to go out and buy some stock today, for every dollar I put in, I'm getting $1.30 in book value of assets. And what I find astounding is those are assets that are making money. I mean, you have a proven track record over time, 18 years, if I have it correctly, of consistently returning profit to the company. You're sitting on a good chunk of retained earnings. Any comment on that, just in general? I mean, you've developed a financially strong business, a fortress balance sheet, and I'll close my mouth and let you comment.
Yes. We have a very healthy financial position. Our debt to EBITDA ratio, which is a key ratio we look at, is right now around 0.7. So we're not a highly leveraged company. Absolutely, when we look at fundamentals, the value in the balance sheet, when I look, for example, at more comparable metrics like cash flow, multiples on cash flow, we're being deeply discounted, I believe, against our peer companies. So on an absolute terms, like you just described, and on relative terms, compared to peers, our cash flows are being currently deeply discounted against other peer companies of similar size in the same precious metal sector, right? And the million-dollar question would be, why is that? And Fortuna, we made a significant acquisition we announced it in April 2021, which was our expansion to West Africa. I think the market reception to that news back then was very timid, and there were legitimate concerns on the part of investors regarding our ability to expand our business to a new continent, a new operating environment. We had a big capital project in front of us, which was the Séguéla construction in a new jurisdiction. So I believe that a lot of investors said, you know what, I'm going to watch this on the sidelines. But we took long-term decisions. We have to take long-term decisions. So we see deep long-term value in the West African portfolio. And since then, what is it that we have done? We made a successful integration of the West African business. We made a construction decision on Séguéla 18 months ago. We've been building for the past 18 months. And in the coming days, we're going to be announcing our first gold. We already guided the market that first gold is expected in the month of May of this year. May is this month, and I only have about some few days left before the month is over. So the gold pearl is coming any day. So I believe that we've been delivering not only on the operating front, like we just discussed with the cash flow generation from our mines and whatnot, but we're coming out of a capital intensive phase with a successful delivery of what will be our flagship mine. Our best mine in the portfolio is the one that is not producing yet, is Séguéla, which starts producing this month of May. So I believe that investors are watching on the sidelines saying, I want to see the cash flows, show me. It's been a difficult environment over the last years for precious metal mining equities investors. It's been difficult for the investors in gold, silver mining equities. So I believe that as we deliver the mining to production, we report our first quarter results now with the 5 mines in the portfolio operating and whatnot, the value will come. I seen that before. It's not, we also had a lot of noise coming out of our Mexican operation. The Mexico, unfortunately, has turned difficult for the natural resource sector in particular, for business in general, I would say, but for mining in particular, and oil and gas as well. So our business in Mexico has been creating a lot of noise also over the last 2 years with respect to permits, granting of permits, us taking the Mexican administration to court on 2 occasions. And now, in spite of all of that, our business in Mexico has not lost one day of operations due to that. We have managed to keep the business running, but it's noisy, right? So we're in a capital-intensive phase, noise coming out of Mexico, investors who have still some risk aversion on mining equities. So, I think that all of that has been weighing on the valuation of the company, but, we have continued to perform and deliver, right?
You have, and I want to pay you a compliment because, I've been investing in this sector for a couple of decades now, and I follow the silver miners very closely. I could name off a long list of silver mining companies that attempted to move into gold mining and, need I say, ran into some serious difficulties. You have not only been successful, but you're on the cusp now of delivering your second mine, gold mine, and I think it's also worth mentioning that Séguéla has basically been completed on time and on budget. That's quite an accomplishment. And I know you always point this out. It's not obviously just you. There's 5,500 people that work at Fortuna, but you're the leader, and you've through today have proven yourself someone who delivers on what you say you're going to do.
I think that that's something we're proud of. We are recognized for that, and needless to say, this is a difficult business. This is an industry where we have to operate in remote areas, in a sector that's every day measured against heightened expectations on the part of multiple stakeholders, be it society at large with respect to natural resources, industries, mining in particular, governments, neighbors. So yeah, no, and I think we've proven we can operate in not only this difficult business, but also in politically complex jurisdictions, right? I think that's something that where we bring an edge. We have proven that we can operate in politically complex and socially complex environments, right?
Right, because you're operating in Mexico, Peru, Argentina, Burkina Faso, Cote d'Ivoire, and I want to touch on this next. You have an acquisition you're doing in Senegal. You certainly have helped me with my geography lessons over the last couple of years. But what I want to get your opinion on is, there's jurisdictional risk anywhere. There's jurisdictional risk in California, Nevada, Canada, Mexico, everywhere. Do you think that I get the feel as an investor that the fact that you've diversified the holdings now across 6 countries, that actually helps to reduce overall the jurisdictional risk? Because does that make sense?
Yes, to some point. But I look at our business more than 6 countries. I look at it 2 regions.
Okay.
Right. So yes, today our footprint expands over 6 countries. But I look at it on regional terms. We are anchored today in 2 regions, the West African region and the LATAM region. To help put for the audience into perspective, West Africa, the gold producing regions of West Africa, where we have anchored our business and where we're looking to expand, is the size of the state of Texas, pretty much. No, Africa is a very big continent. We don't operate in Africa. We operate in certain portions of West Africa. So if I draw a contour around, the gold-producing regions of Senegal, Mali, Burkina Faso, if I include Ghana, the Ivory Coast, and I draw a contour, the surface area of that is pretty much the size of the great state of Texas. So to bring things into perspective, right? Sounds like a lot of country, but for me, it's a region and it's the size of the state of Texas. When I look at LATAM That time is more dispersed. We go from Mexico all the way down to the northern province of Salta in Argentina. And we manage that from a hub in Lima, Peru, which is centric to that, right? So we are not looking to expand our business to Australia or even to North America. These two regions, you have to recognize that although they might sound exotic and far and away to some, these are well-established mining regions. All those countries are mining jurisdictions. These are mining regions. So, and I see benefits there compared to other places. We're talking about your jurisdictional risk in compared to what? In California or in the US or Canada, you can permit and develop a mine successfully. But for example, the cost pressures and inflationary pressures in North American mining are significantly higher than what we're seeing in West African mining or Latin American mining. The timing for permitting is completely different in Canada, in North America, compared to where we operate in the regions where we're established. So, as a reminder, the Séguéla mine, which starts producing this week, the Séguéla mine was a 400,000 ounce resource in 2019. So from 2019 to today, in 4 years, we taken the project from a small resource to an operating mine with permitting in the middle. It's impossible to think you can do that in North America. That would take 10 years, a decade, right? So from that perspective, there are different risks when we think about our industry,
right? No, that makes sense, Jorge, because you have to look at the big picture, right? How long will it take to get permit? How much will it versus what may be, and a lot of times people's perceptions, including mine, are wrong, right? Like I honestly knew very little about West Africa prior to the Roxgold acquisition, and as I learned more and did more research, I became very comfortable and, quite frankly, very excited about the region. Is it true that that Texas-sized portion of West Africa, how does their annual gold production stack up against other parts of the world?
That area, if we group the gold production out of all of those countries in that area, that would make West Africa the largest gold producing country in the world. If we just for a second assume it's a country, right? The gold that comes out of that area is about 380 metric tons of gold annually.
Wow.
Ahead of China, ahead of US, ahead of Canada, ahead of Russia, ahead of Australia. All of those are continental-sized nations. So that small area, the size of the state of Texas, produces more gold than all of those continental-sized nations, China, the US, Russia, Canada, Australia. So if you want to be a force in mining, you have to be there. And that's why you have Barrick, Newmont, Anglo, IAMGOLD, Endeavor Mining, a very successful company, all of them operating there, right? So we are there for the long haul and we like it. And, and people forget something, Ron. Mining has always been a frontier business, has always been a frontier business. If you want to invest in mining and you want your mine, in a very comfy place right next to the city or, yes, there are a few of those and those are treasure jewels, but mining has always been a frontier business and still is.
Interesting.
You need to have stomach for that. Yeah.
Right. Right. That's the expectation going in. And then someone with your level of experience to manage the challenges and the risks that are inherently going to be presented as the company proceeds forward. If we look at Séguéla, any day now, we'll get news of the first gold pour. I was listening to Paul speak about the exploration potential at Séguéla. The mine will produce, forecasted to produce roughly, is it 120,000 ounces per year when it's fully up and
The
running?
production varies year to year, and the production target at this mine, I have to say, is going to be a moving target for some time because we continue to expand the resource. And with that, we are already thinking about a potential expansion of the mine, something that will have to be defined in 2024. But for this year, we already provided guidance. We expect 60 to 75,000 ounces of gold that will come out in the second half of the year at an all-in sustaining cost of about $1,000 per ounce, right?
And that's what you have established, the resource that's established. But I thought I heard Paul say that there's like 30, I mean, this is a big land package you have, and he said there's like 30 targets and that the number continues to grow.
Yeah, and like investment advisors say, past performance is no measure of future success. But if you look at how Séguéla has evolved over the last 4 years, it has gone from 400,000 ounces in total inventories to close to 2 million ounces today in total ounces in inventories. So that speaks to the potential. The exploration team has been and continues doing a superb job. So we've been focusing over the last 18 months on what we call the Sunbird discovery. Sunbird, this second half of the year, after the infill drilling we've been doing these past months, will come into the mine plan. And the drill rigs have already moved out from Sunbird and are testing new areas. I can name a few: Badior, Barana, Gabbro North, in the north end of our property. We have a commanding land position at Séguéla. We control close to 30 kilometers. That's 30 kilometers along the trend in the productive structural environment with the right rocks. And so, yeah, we have, let's say, a lot of room to play in the belt. We control it all.
Past performance is not a guarantee, but I think we can reasonably, optimistically think there may be some future good news. Yeah,
we have targets. They have to be drill tested, and we're doing that. And out of the 30, not all, of course, are going to come into a resource, but I think 30 is a pretty big number in my experience for those type and quality of prospective targets for drilling. Yeah.
Let's move over to Senegal. You recently announced acquisition of Chesser Resources out of Australia, another exciting, is it a development project at this point, would you call it, or advanced stage exploration?
Yeah, Chesser is a great opportunity, and it's the Chesser team has done a good job advancing this prospect from early stages to around 800,000 ounces in total resources right now. Chesser management decided to advance the resource to a preliminary economic assessment stage. We view it more as an exploration project still, not a development project. So we are very excited about the exploration opportunities that this package brings, because the Chesser land package sits at the heart of the Senegal-Mali shear zone, which is in West Africa probably the most productive gold belt. This belt hosts the bigger gold mines of Barrick in the region, Lulo, Gunkoto. Further to the south in the same belt, we have the Fekola mine, which belongs to B2Gold. All of these are mines that produce in the range of 400,000 to 500,000 ounces of gold annually, right? With multi-million ounces in reserve resource inventories. And this concession package sits right in the heart of that. So it's a tremendous opportunity. Today, the resource is small, I would say, sub-million ounces. But it has all the trademarks of Séguéla back in 2019. When I told you Roxgold acquired back then a 400,000 ounce deposit that today is a 2 million ounce deposit, right? So we see there a 750, 800,000 ounce deposit, but multiple targets remaining to be tested, further work to do in the existing research to enhance the geologic understanding. These are structurally complex geologic environments. I believe there is still lots of room to improve the geologic understanding, the structural controls, the understanding of structural controls, and even potential to expand in the near area where the resource exists and in the greater property. So our priority there is exploration. It's been I would say a cheap acquisition of a high value exploration opportunity. And there is some fundamental value there because those 800,000 ounces are economic. They have a PA that shows robust economics. But I think we want to see that grow beyond 1 million ounces before we entertain a development story there. Yeah.
Okay. Very interesting. Well, you've certainly delivered in the past, and it feels like to me you've positioned the company for some exciting growth in the future. I heard you recently say you're coming out of a capital intensive period, obviously with building the mine in Séguéla, and that if the gold and silver price cooperate, that we could be in for quite a season of harvest regarding being able to maybe pay off. There's not a lot of debt, but pay off some debt. Any comments on that? I mean, does it feel like to you potentially, right? None of us knows what's going to happen, but if we continue to have a relatively strong metals price, kind of where you've positioned the company right now, coming out of this capital intensive period, that you could see, quite a bountiful harvest in the coming year or two?
We have set up the company for that. And that's what provides optionality to the Fortuna investor, right? We have set up the company for that. We decided to build the Séguéla mine at a time where it was not very popular to say, I'm going to be building a mine. And we're ready to harvest. So, if you look at what we have been doing with the portfolio, how the Fortuna asset portfolio has been changing over time. We have 5 mines in the portfolio today, 3 of which have 10 years plus in reserves. So to give returns to shareholders, we need predictability. It's difficult to start giving returns to shareholders at a time of harvest when you are pressed with short life of mines, right? Investors need to realize that one of the challenges of this business is that it's a never depleting business. So if you have mines that are running out, your priority has to be replenishing reserves, and that requires investment acquisitions. We made a significant acquisition in 2021, and it's taken 2 years at the end of the day before we start seeing the harvesting of that. We had to issue shares. The pro forma ownership of the company changed, and Roxgold shareholders became 34% shareholders of Fortuna. We had to issue shares. So the cash flows that we're generating since throughout 2021, 2022, early 2023 are being, of course, diluted over a larger amount of shares. But Séguéla is not in production yet, right? So it's only now that on a per share basis, we start seeing the true benefits of that transaction. And that's thinking long-term and betting long-term and setting up the company for something good with long life assets that operate with low costs. And in a time of high prices, we can certainly start giving back to shareholders, right?
Yeah. You can through smart strategic decisions, you can position the company so that in a difficult metals environment, you'll survive. But if we're fortunate enough to have a more agreeable metals environment, the company can really thrive. Like, yes. I guess that's,
our investors need to have the confidence that, if you're investing in precious metals today, it's probably because you have a bullish outlook on gold prices for whatever reasons. I'm not going to debate your reasons, but if you're investing in mining equities today, it's because you have a bullish view on the underlying gold and silver. Now, we can be wrong for some time, and the market can have violent swings in the meantime before your theory materializes. And you want to make sure that the mining companies you invested on still in business and can tolerate those swings that might take place before your theory proves right and prices move high and you are rewarded as an investor, right? But you don't want to invest in a company that if metal prices drop by a silly percentage, the company starts, trading water, right?
Right.
And then that's my job, right? Set up the company for the long term to perform throughout the precious metals price cycle. That's a mantra here, right?
And you, I want to point out to the viewers, you've done that for a few years. You founded the company in 2005, is that correct?
Yes, two associates and I co-founded Fortuna back in 2005, yes.
And so you've proven your thesis, right, that you have been able to position. 18 years is a pretty long time for a mining company.
Every mine we have developed still in operations today. Every mine we have developed still in operations today.
Well, Jorge, 18 years from now, when we're still here in the basement talking, let's hope we can continue to say the same thing, huh? Right?
Well, yeah, absolutely.
Thank you, Jorge. I really appreciate your time on behalf of my viewers. You're, someone who's highly respected in the mining industry, and there's a reason why. Did I miss anything, or any closing comments you want to share with us?
No, it's exciting times ahead, and I know that a lot of the gold mining investors have been put to the test. But we always have an optimistic view on things, and the company is I never seen Fortuna as strong as it is today. Never.
That's great news, and hopefully we'll get some good news out of Séguéla. I'm wondering which we're going to hear first: the first gold pour at Séguéla, or I think you're in competition with the U.S. government trying to resolve their debt ceiling. One of those is going to happen first, so we'll see, right?
That's a whole different story,
right?
But yeah, I hope I have good news in the coming days that we can publish.
Great. Thanks, Jorge. You have a great day, and we'll talk to you next time.
Good to talk to you, Ron.